known for nearly 20 years now. Chetan Parikh joins us to talk about how a true blue value investor like him investing and staying put in a market like this when markets have really run up because of liquidity, not so much so because of fundamentals and because of true value. Chetan, good morning. Thank you for joining us. I hope everything is fine and safe with your loved ones and with your colleagues.
I hope the same too for you and for the whole ET team.
Well, thank you. My introduction perhaps was the question in itself. You are a true blue value investor, and just to benefit for our viewers, a value investor is someone who believes in buying something cheap, below its intrinsic value and well below its fair value. So how is a true blue value investor like you, Chetan, dealing with a market like this where liquidity is the driver, not valuations or earnings?
Well, I think that if you held on to certain stocks and you sort of have some belief in the durability of the competitive advantage and they are not terribly overvalued, then I think that you hold on to them, because how many times are you going to flip your portfolio? The thing is, obviously, things that have been bought more from a short-term angle, more catalyst driven, you're not really sure about how much the business model is going to survive. That's when you start, thinking of when to exit. For instance, there are some companies which have very strong moats, which have light on capital sort of intensity. And and they are not at outrageous valuations. You do not think of necessarily exiting them. There is a huge tax impact also now that one has to consider if one keeps on rotating stocks to open. Furthermore, I think that in today's times,
pre-COVID and post. Please go ahead.
Yeah, in today's time, I do not think that you can have necessarily, even if you have financial assets and you have been predominantly in equities, I do not think that it is prudent to have everything in the equity market. You need to build cash up, given the state of what's going on around the world. And I think that you need to have some precious metals too. Some precious metals to me is largely gold. I don't have any silver, but certain gold.
Has your pre-COVID and post-COVID portfolio changed in a meaningful manner, given that the shape of the economy and the shape of the world is also going to change?
At the time, in March, we were looking at one set of figures, and then in July, we were looking at completely a different set of figures. I wouldn't say the re-rating, but if you would like to use the word reversion to the mean, that has happened very fast. And we reached what we considered were fair values. And so we started taking money off the table. We have entered wherever there is a fair amount of cash in certain portfolios. We have gone ahead and we have, obviously tried to buy things that are out of favor. We know that the calculation of any form of intrinsic value would be extremely difficult in these times, because what is going to be the pace of recovery of both the Indian economy and the global economy is anybody's guess. So any intrinsic value calculation you do of beaten down sector, let's say for instance, the engineering sector, the sector which is front-facing the economy, capital goods, I think it's very, very difficult today to do any sort of any sense. It will be couched with a lot of uncertainty. And clearly, if the recovery, if you're assuming that everything is back to normal by, let's say, FY22, and it takes to FY23 to get normal, then you have lost essentially your cost of capital for 1 year. That changes numbers. So we are hopeful that things will not get completely out of kilter, that there will be a slow recovery back. That's our base case assumption. Anything that makes things, makes the economy grow a lot faster, if the recovery is very fast, then that's potentially the upside that you get. And you try to build in a layer of margin of safety so that it's a little longer. You are not too bad on the returns.
Hmm. So let's talk about where are you picking your spots here. There are PSU stocks which are cheap, but minority shareholders are not protected. There are IT companies which are throwing a lot of cash, but growth will not be strong in terms of double digit. Then you've got banks which have completely broken down. You got pharma which is high growth but expensive P multiple. So where are you picking your spots in this market where you are getting a good entry point in good businesses because of the market shakeout?
Okay. And when you look at IT, I agree with you that the immediate growth may not be, it may not be, something which one had probably seen in the past. But there are some engines that are whirring up over there. You've got an entire digital transformation of the core, largely because of COVID. And I mean, there's a trend, but this COVID has accelerated that whole trend. And that's a huge opportunity. Of course, there are some sort of verticals that are under a bit of trouble. You have retail, which is under trouble. You have manufacturing, where supply chains are all, sort of broken up. But I think broadly, and then if you go down the curve, you get away from the large caps. There are some small mid cap companies which are in the product space and which look interesting. Yeah, I mean, their valuations are still way below what they had hit, maybe a year ago. So and then there is traction. So, I think that there is opportunity to support. You take the next one, and the next set that you had mentioned, which is on banks, and I think banks it's got a very big margin of uncertainty in terms of what the earnings are going to be, going forward in the immediate future. So there are going to be asset quality issues. We're not even sure whether the moratorium numbers really reflect. Once a moratorium ends, and even the moratorium percentage is probably, I don't think it's the right indicator. We will know when the moratorium period ends what really is the asset quality. Having said that, I would say some of the bigger banks have already done all the right things. Have gone ahead and taken huge provisions. They have raised capital. They have gone ahead and they have been very careful about their asset mix. Their underwriting track record so far has been excellent. This has been a shock. Furthermore, any sort of marginal, asset mix changes that they are doing are towards the conservative end of the lending. So, and the large banks are gaining deposits. I mean, these sort of times people would want to put deposits into them. Furthermore, you have, let's not forget the long-term story of India. We can, we can get worried about and bogged down about the short term, but India has, on a macro front, India has one of the lowest external debt to GDP ratios. I think the government, India has always opened up. India has always done major reforms in a crisis, and that really remains. And the demographics, you look at all the plus points that were there maybe 8 months ago, they still exist. They are not changed. So I think if you look at banks and if you look at any sort of growth in any economy, financialization has to happen. It's a given, and you've seen that in other countries. Digital adoption will happen. This is a very young generation which is quite savvy with using guys like me don't know how to use it too well, but the young generation they're total different kettle of fish. So I think that companies and then the PSUs, which I think there is going to be a challenge to adopt to the new way, fintechs, etc. It's going to be a new way of doing things. I'm not so sure that so there will be a space that will be vacated by market shares, which will be vacated by PSU banks, and I think therefore the runaway from well-run private banks is just immense. And COVID doesn't really, in fact, COVID doesn't actually give them additional tailwinds. There is a bump ahead, but I think that bump is just a bump. It's still a secular long-term story. I'm making the assumption that the whole world doesn't fall apart, that there is no further knockdown in terms of, the financial aftershocks or the real shocks that we have experienced so far. I'm making those assumptions because if we start getting very pessimistic about things, then there is no place for equity.
Absolutely. Chetan, can I probe you a bit for some of the other themes that you feel will be resilient in the longer term, despite perhaps any market volatility or shocks that we may see in the next 6 to 9 months?
Sorry, I couldn't catch that very clearly. I mean, the volume is not. Can you repeat that question, please?
I was wondering if. Sure, I wanted to probe you a little bit more for some of the longer term themes that you also touched upon, saying that there will be themes that will ride out any near term volatility.
Yeah. So I think that, again, all the sectors that you mentioned, financial services, banks, you take even, although I would not, and FMCG, for instance, I am not going to advocate that one buys FMCG companies at the valuations, because the potential 10-year return that you will get any conservative sort of growth numbers is not going to be anything to write home about. There are better places to put your money. So, but that theme also is a fairly resilient theme in terms of if you're expecting a lot of stress to come in the next few years, then that's also a sort of place where it is a better than cash option, and probably with far less volatility. So, I mean, broadly, I don't believe that, what I see a big shift in, and that is clear in terms of, is the move towards larger companies. You are getting the strong becoming stronger. Anything that tests them, environment like this, is going to cause a big shift towards the larger players. The unorganized sector, the smaller players have found it for the last 2-3 years with the plethora of regulations that have come in, have found it difficult to compete. And this is just sort of, probably being one of the final straws on the back. So I do believe that you are going to have less competitive intensity as far as some of the larger companies are concerned. And that should actually be a positive.
Are there other perhaps pockets of the market where which could benefit from the digitization theme apart from pure play IT? And would you say anything that touches upon that is a must-have really in a portfolio currently?
I think that digitization is a theme that is going to run across sectors. So, for instance, if you were to look at, and maybe this may not be immediately relevant to a country like India, but if you were to look at, the fourth industrial revolution, you are talking about a lot of countries. You're talking about artificial intelligence, you're talking about the Internet of Things. This is happening. It is happening at a very fast pace. I mean, there are, for instance, supermarkets. There are grocery stores, warehouses in China and in the United States, which are completely automated. This is a huge theme. I think that this will. So, today, I think that having a customer-facing experience digitally is a given. It's necessary for every company. So, I mean, the degree to which you're going to have it may vary. Whether it will destroy a company or make a company also may vary depending on where the bear monster decide to wrap their arms. But I think that this is, digitization, automation, in many parts of the world, and therefore they will also have to, if we have to be competitive, we may also have to follow suit. So it's going to be a challenge because on the one hand, there could be a fairly large displacement in terms of skilled people. If machines can do things, can actually do a lot of task encroachment, which is going to be a challenge going forward. But I think it's too much to speculate as to what is going to happen in the very speculative thing. But the trend is very clear. It's there. It's going to impact every industry. I mean, IoT, you would have to wonder which of the capital goods guys are up to speed in terms of being able to deliver the capex needs. For, let's say you take drones, and drones are in China, there is a company which has got a 70% market share of the global drones market. Do we have anything like that over here? We have to think about that because these are technologies that are definitely, we're going to see a lot of them in the next 5 to 10 years. I mean, we have one player today, which is, I think, amazingly well placed. I don't want to name the company, but I guess you all know who I'm talking about. But that is amazingly well placed in the digital space in India. It's made a big metamorphosis. It has made huge investments, and today I think with the capital raising it has done, it has vindicated its business model. I think that we see a lot of that happening in the future.
Wonderful, Chetan. Great speaking with you today, and thanks for joining us on ET
Thank
Now.
you. Thank you for having me, and all the very best, and stay safe.